Good afternoon, everyone. Welcome to the Stock Market Morning Prep video for Monday, February 2nd. Wanted to get this video out to you over the weekend so you can review it at your leisure. Sunday's obviously the Super Bowl, and Monday morning I figured I'd get this out earlier. It is a little bit longer than expected because of what happened last week, and I wanted to just kind of address a couple of charts and indicators, and we'll do a top-down approach from a weekly to a daily in some of these key indices. Okay, on Friday we had markets really taking on the chin. Dow Jones down 251, Nasdaq down 48, S&P was down 26, and Russell was down 24, almost 25 points, closing at its lows. Now we're coming into a real important part here where we might get a bounce. We are making lower lows and lower highs, so it's important to understand that. So let's dive right in, guys. We've got a lot to cover today. Right now, I want to go over some indicators. I want to see if we're at some of these washout levels where we highly would anticipate a bounce. Now, we have the NYUD, which is advanced decline with volume. One of my favorite indicators because it includes volume. And as you can see here, we're not even close to being a washout here. So we have plenty of room to run to the downside here. All right, so that's the scary part. Let's take a look at the 2-year. Now, the 2-year yield is at 1.21. Okay, that's not helping the banks and financials, which is also needed for a rally here, and that's not good. And I'm going to show that XLF weekly chart that we broke on Friday, a critical weekly support. Now, we just broke it for this week. Now we're going to need to close back above it this coming week, the first week of February. Otherwise, the banks and financials may be in trouble, which will hurt equities. Okay, so let's keep that in mind here. Now, this yield curve is really taking it on the chin, as you can see. Look at the XLF down below. You can see that starting to move over. You could even call this a double head and shoulders here. Two heads, left shoulder, right shoulder, neckline, which is actually broken. So that's not a good sign. I mean, it is not a good sign. We were rallying here last week early on, and then we started to roll over. This will also help, will also affect the IWMs because we have small cap regionals that are in the IWMs, which would be the Russell 2000 ETF. Let's take a look at the SPX and ATR. This is the only thing here where the ATR is at these elevated levels where you usually see some sort of a bounce. And this is the only indicator that I use for volatility aside from the VIX, but this is actually true volatility. I like using the average true range on the S&P daily to cash. So you could see that 28.53, we're back at these lofty levels, and we really sold off. We haven't gone really too far, nothing like this, but you could see here, this is the S&P making lower lows and lower highs in a sideways consolidation at the moment, but not looking too good. But we are at these areas where we would possibly be looking for some sort of a bounce, just like this, and then of course here. Okay, as we get to these extreme levels in the average true range on a daily chart, we could be looking for at least a dead cat bounce or a short-term oversold bounce. Okay, now let's take a look at the Mcclellan Oscillator, one of my favorites for breadth. We're down to negative 1197, and we want to look at these washouts when the Bollinger Bands, they close out of the bands, and the next day they close in. Okay, this like this here and the tops and these bottoms. So we're really in neutral territory, plenty of room to run to the downside. Okay, so this tells me that this little downside move may not be over at the moment. Now, we could rally on Monday too, and I know it's not giving much of information, but because we need to see really where the markets are headed. Now, we have a big engulfing candle, and I'll show that to you on these daily charts, but we have an engulfing candle that usually when you get a large move like that, you usually get some sort of a weak bounce going into tomorrow, and then really need to see Tuesday, Wednesday, and Thursday going into the non-farm payroll numbers that come out on Friday. So I think really Monday might be a test to see what happens, and then Tuesday and Wednesday really is going to solidify, are we headed lower, or do we move up for 2 or 3 days? And that's going to be the real turning point in the markets. I don't want to point out I don't want to say, hey, look, we're definitely bouncing, because it doesn't look that way, at least at the moment. And we may get that bounce Monday, maybe Tuesday. We have mutual fund inflows that start to come in Friday, Monday, and then a little bit on Tuesday. So that could kind of prop the market a little bit. And again, meaning that we've sold off the last couple of days pretty hard here. And again, here's this S&P with the average, with the 50-day stocks above the 50-day moving average. Again, not at these washout levels here. We need to get down to these areas here. Now, we've had a couple that where we bounce, so it's possible that we could bounce on Monday. Now, let's get into the indices. This is really important. We're going to do a top-down approach today, looking at the weekly charts on the key indices and then going into the dialing down to the daily chart. Now, as you can see, and this is why I say that, guys, we're still in a bull market, whether you like it or not. Look, I love to short the markets as well, better than anybody. But, when the trend tells you that you're still up, you're still up here. So I wouldn't want to be position myself heavily short, at least not at the moment here, until we get some further clues off of the larger term time frames. Okay. Now you can see here, well intact. We're holding in above. Now we did have an outside week, so that's a possibility that we could come and test a 50-week moving average, which comes in at 194.98 on the SPY weeklies. So, and still be bullish, okay? Still have a longer-term trend intact. Yes, the daily charts are in a short-term downtrend, okay, but we have to watch for that possible bounce. Let's take a look at the daily chart here. So you can see we're clearly in making lower lows and lower highs, and this here does not look good. However, okay, you could see that we are in a sideways consolidation for the last 3 months. Okay, if you take this here and here, you could see that we've really gone nowhere since the beginning of November. All right, and it's really just been a bunch of chop. Now, when volatility does increase, it means that price wants to vacate the current area of where price is at the moment, and that is at these ranges. So we could bounce from here. The 200-day is below, so if we do break this little short-term support area, the next target would be the 200-day. And if we do break the 200-day moving average, which coincides with these volume zones, as you can see, then I think you're going to see that 61.8% really be the target of this downtrend. So we really need to keep an eye on it. I also like to look at RSI breaking back above this downtrend line. Same thing with MACD. If they do break back above it, that is a positive sign. So we'll just have to take it one day at a time, guys. Monday, I'm not too sure what's going to happen. So I'm going to keep a neutral stance for Monday, and then let's see what happens on Monday for Tuesday and Wednesday's trading. Now let's take a look at the XLF weekly. This is the concern. I don't like that we closed below it, but again, 1 week breaking below doesn't mean that we're headed much lower. We need to see next week. If next week solidifies this previous low that just passed, then I think that the banks and financial in trouble, and I also think that U.S. equities will be in trouble as well. You cannot have a sustainable rally without tech and financials not moving along with equities. Okay, so this is a concern to me. So just keep an eye on it. Let's watch the XLF. And if you do trade the Russell, you should be looking at the XLF and see what that does as well, because it does give a little bit of influence, if you will. Here's the transport weekly. Now, the transports had an inside week. Now, this is our leader. So you could see clearly in an uptrend, really didn't go anywhere. That's a very good sign for the bulls. So again, guys, I wouldn't be looking to start legging into a large short position at the moment. Maybe if you challenge the highs and we start to fail back at the highs, I think that would be a better short for at least a correction. I am looking for a correction here at one point, and I'm sure we all were for the last couple of years and did not get it. Now, the last, I believe, we haven't had an 8 or 10% correction. I believe it's going on 3.5 years, and we're going to need a correction to really unwind a lot of this overboughtness that we had since 2012. Really, since 2009 lows, markets have just been going up, especially 2013, having the markets up 32% in 1 year, which is pretty much unheard of. Anyway, back to the charts. You can see the weekly charts, inside week from the previous week, holding a 20. Very, very bullish. Again, this is our leader, so we want to take cues of what's going on with the leader here. Okay, now on a daily chart, it doesn't look so great, obviously, right? We had up day, down day, up day, so a lot of chop. We're still holding here with this lower trend line support, and we're right in here. So we had an inside day from Thursday, but we are below the 20, below the 50, and we're still above the 200. So if we lose that 61.8% retracement right here, which would come in just under about 150, 152, then I think you're going to test that 200-day. And ultimately, I think all of the indices will test the 200-day. Here's the IWM weekly. Does this look bad? Not at all. I mean, just a lot of chop really since pretty much all of pretty much all of 2014. Take a look at that. It's just nasty. A very, very ugly chart, ugly price action. And I mean ugly meaning this, up and down. This is beautiful right here. Nice uptrend, and then we went sideways. Now remember, I'm watching the 120 area because if eventually we break out of 120, I think you're going to have a big, big move in equities, and we're going to eventually test that 2100, 2150 in the ES. So I'm watching this closely, okay? And I do think it's bullish. Now, obviously, yesterday we had, on Friday, we had a very large candle lower. That is absolutely a bearish signal. However, when you do get a low like this, you usually get a retracement at least back up to 50% of its move, and then we would reevaluate for Tuesday. So that's where I'm saying I think Tuesday and Wednesday will be really a deciding factor on where the markets are going to be headed next week. So let's keep an eye on, obviously, on Monday, but I think we'll get a better answer come Tuesday and Wednesday. Okay, let's take a look at the diamonds. That'll be the last chart, and as you can see here, this is one of the obviously the follower, not a leader at all, but you can see here holding above that 32% retracement. Had a real nasty day, down 251, but again, we're still above the 38% retracement here. So let's watch this here. We got a nice little area. As you can see here, we're testing a double bottom, and we did fill that gap here from November. So let's see what happens here. Again, lower lows, lower highs. So short term, definitely in the downtrend. Let's keep an eye on things for Monday. And again, guys, volatility is increasing, so that means that your stops have to be wider. I would definitely reduce your position size if you feel a little uncomfortable with the volatility, or step out. When in doubt, cash is a position. Remember that, okay? Enjoy the rest of the weekend. Enjoy the big game. Super Bowl Sunday tomorrow. Seattle Seahawks, New England. And we will see you on Tuesday with a full update. Have a great day and enjoy the rest of the weekend, everybody. Take care.